Hello guys, good evening. So a lot of IPOs are coming nowadays, and I came across this very interesting one, Data Patterns Limited. So when I read the RHP of the IPO, I found it like very interesting. So I thought, why not cover it in a video? So let us discuss about this IPO and whether or not to apply or avoid for this IPO to subscribe. So, so Data Pattern is like is a manufacturing company which is related to defense and aerospace electronics solution provider. So this is like recently only we saw Paras Defense, MTR Technology. So this company is also in line with some of that like उनके जैसा ही इस company का काम है, but then it is mostly focusing on hardware design and development, software design and development, firmware design and development. So this company focuses on design and the production of that particular product. So this is a manufacturing company, and a lot of the funds and everything is invested or involved into R&D. So the company is aggressively investing into R&D because this is related to defense and aerospace, and this generally requires a like timely innovation and innovative solutions to come up with. So these are some of its competitive strengths. I came across a very interesting the this Yes Securities has covered Data Patterns IPO, made a note on this. So I thought, why not share this with you guys and refer it. So the company is involved with, as I told, the manufacturing and designing of the aerospace and defense products. So its main customers are ISRO, DRDO, and the like government organizations. We can see the financial snapshot of financials here. So the revenues, EBITDA, and adjusted profit after tax has grown at a CAGR of 31%, 90%, and 169% of profit after tax CAGR respectively. So like there's a huge growth opportunity for the company. So since the company is very small in size, so a lot of opportunities in the coming year, and the company is very small in size. We can say that there's only 277 or 355 crores of assets in its books, and somewhere around 200 or 220 crores of revenues in the last fiscal year. So the company is very small in size, and also the issue which the primary issue which they are going to raise is a mix of fresh issue and offer for sale. So the fresh issue consists of somewhere around 240 crores, and the offer for sale from the promoters side is 350 crores. So aggregating somewhere around 588 or 600 crore more or less. So this is quite a small company, but then the growth opportunities are very much, and we can see like the objects for the issue is the prepayment and repayment of borrowings, funding working capital, and upgrading and expanding the existing facilities of the production capacity. So yeah, so okay. So the objects of the issue is the repayment of the borrowing. So they have like very low debt, so they are going to repay the debt for the company. And the working capital requirement in such companies are very high, because when I was reading RHP, I saw an interesting point where it says like their receivables turnover is somewhere around 200 to 250 days. So it is quite high to fund their working capital. Like the account receivables in the books are very high. So उनके पास क्या है, उनके पास they don't have money to spend on the working capital. Like since the accounts receivable are very high, they are going to realize it in somewhere around 200 to 250 days. So they are planning to do capex and increase their manufacturing facility by investing somewhere around 2 point, or like buying out some 2.888 acres of land in Chennai. So this is quite good because the company is very small in size. So the more they capex, the more they are going to earn in revenues, and the more they earn, the more as a shareholder we will get the earnings per share. So since the revenue, EBITDA, and profit after tax margins are like quite high and very good, so this can be a positive point for the company. Also, in the order book, they have the order book of somewhere around 600 crores right now. So almost 1.1x of last year revenues, they already have orders. So even if they don't get any orders in this current fiscal years, they are going to generate more than last year's revenue. So this is quite a good point. And also it mentioned that ki unke paas, they are going to realize this order book in the next two fiscal years, and they are also going to like acquire new orders from the companies and all. So yeah, this business model is very unique and very interesting because this involves very innovation and design related products. So they are like heavily invested into research and development facilities, and also the management team is quite experienced. They have somewhere around 500 engineers, which is quite good for the aerospace and defense manufacturing company, because there has to be very precise or thin line. Like they cannot afford to give out a defective piece, because it is very precision effective. So the engineers and the quality of the management is quite good, so which adds to the point. And if we see a financial summary here, the revenue has quite grown quite a bit. It is in a upward trajectory line. So the year-on-year growth is 19%, 43%, which is quite good. We can see that operating profit margin for the current, like previous fiscal year, was 42, 41%. So this adds to the point. And the EPS growth is like massively increasing from 1.6 to 4.5 to 11.9. So like as a shareholder, we are only going to benefit. So I'm sure that this must interest you. And the return on equity is also quite high, from 11% to 31% in just 3 years. So this is very interesting. Since they have very low debt to equity, we don't generally see return on capital employed, because the capital employed includes the debt. So if we also, they are going to fund their, like they are going to repay their debt. So I suppose like in a year or in a quarter or two, they will become debt free. So this is quite good. And also, very thanks to Mr. Viral Shah for creating this report. And I'll add the link of this report to the in the description below, so that you guys can check out totally. And this is quite good. This is 15-page report on the data patterns IPO, so it is quite good. Yeah. And the major marquee customers of this data patterns are like ISRO and DRDO, BEL, and yeah, that's it. And if we do like peers analysis, so the data pattern is quite a small company with only somewhere estimated market cap of 30,000. And Paras Defense, also listed recently, is having a market cap of 28,000. But when we compare it with Paras Defense, the revenue is quite good. The profit after tax is also almost more than three times the profit after tax. And the earnings per share, you cannot believe this, earnings per share is 11.9, which is quite high for such a small company. So this is quite good. The valuations are also good. If we take like the industry average or somewhere around there, it comes out to be more than 70%. And if we see the recent trend, the Paras Defense, which is a listed company in a like recently only, so it has a PE ratio of 131. So like this makes this company very attractive. So uh, like I'm surely going to subscribe for this IPO from like whatever demat accounts I have. The ROE is also quite good, quite high, and that is one of the best among its peers. So MTR, if we see, it's only 9.7%, whereas Paras Defense is only 7.6%. So it's quite good. And BEL is a government company, so it is a market leader with a market cap of 5 lakh crores. So yeah, it's quite good, and we can surely not choose to miss this IPO, and we should subscribe to this IPO. And this are just some data points for the company, and this is a snapshot. Okay, so let us check the what premium is currently running for this IPO. So for premiums, I generally check IPOWatch.com. So here we can see data patterns 550 against the issue size of issue price of 533, I guess. Yeah, 555. So almost 100% gains we can expect on the listings. And also this company is quite good for the long term investing, like because our हमारे जो government है, if they spend like if they spend heavily on defense and aerospace sector, so these are the only companies which are going to benefit, right? So I think we must keep a tab on this particular IPO, and our advice is to subscribe for the IPO from like for the purpose of listing gains and also for the purpose of long-term investing. Thank you guys. Have a nice day.